Retailers getting rocked by the threat of Chinese tariffs, but investors starting to pick out some potential names worth buying. Our Courtney Reagan has that story. Morning, Court.
Hi, good morning, Carl. So the trade war, of course, has hit retail stocks pretty hard. But knee-jerk sell-offs haven't kept valuations depressed for all retail names, which makes sense. Once calmer trades prevail, there's a realization that not all retailers will be hit equally hard by tariffs. In fact, for some stocks, the worst may be behind us. So in early May, the retail ETF, the XRT, took a big leg down after trade talks between the U.S. and China broke down, and that third list of tariffs increased from 10% to 25%. The XRT then started to rebound in early June, only to fall again a week ago when President Trump said a 10% tariff would be implemented on the final $300 billion worth of Chinese-made goods on September 1st. The XRT is down more than 12% since that May 3rd high when trade talks started to fall apart. But a number of retailers are higher than that previous high point, perhaps suggesting a near-term floor for some. So Costco up more than 12% from May 3rd, or before those trade talks wore down. Ross Stores and Dollar General up 9%. Target is up 7%. eBay and Walmart up 5% above that May 3rd high. But it could all change when retailers report this week and next. Investors will be hyper-focused on commentary about tariff risk. Macy's reports Wednesday, and last quarter, CEO Jeff Gennett told me if tariffs are levied on the remaining $300 billion of goods, which we now know is happening, he said at the time, quote, it would really impact our categories. And when you do the math, it's hard to find a path through that wouldn't impact customers, which we all know means higher prices. Back over to you.
Hey, Court, it's hard not to notice the names you mentioned there have minimal foreign exposure, right?
Exactly. And I think that that's part of the point, right? So when you get these big tariff headlines, you see the whole group sell off. You see a lot of fast, quick, deep movements. Then things calm down and traders and investors start doing their homework and they start realizing, wait a minute, it doesn't make sense to sell off Walmart as much as it makes sense to sell off, say, Steve Madden. The exposure to the tariff risk is very different for those two names.